And when you give somebody the cheapest price, I don't care how good they are, when they have a claim, you don't like them anymore.
Welcome to the Not Unreasonable Podcast. I'm your host, David Wright, an actuary and reinsurance broker. This is a show of interviews with people who have something to teach us about managing our businesses and ourselves. There's a lot to learn out there, folks, so let's get to work. This show is brought to you by Beach, where I work and have worked my entire career. We are a global reinsurance intermediary, and we pride ourselves on creative thinking, deep analysis, and client service. Those three qualities are actually intimately related because you can't spend the energy digging deep into a problem unless you really care about the client. We find that when you really do understand the problem, the solution becomes obvious, even if it seems a little bit unorthodox to the outside world at first. The nature of insurance is to take solutions we know and trust and try to force them onto the problems of the day. We just don't settle for that. You can see further at beachgp.com. I sometimes think of insurance as a morality game. The problem of assessing and pricing risks is so hard that we all fall back on human concepts of fairness and relationships to guide our actions. Think about the oldest of old school underwriters. They build relationships. They fight claim swindlers and predators to the death. They're unscrupulously honest and fair. Maybe the most fundamental quality for humans is trust. And the thing that great underwriters are great at is figuring out who is worthy of that trust and nurturing it. Rick Lindsey is, to me, the embodiment of humanity in insurance. His insurance isn't about technology and data transfer and machine learning. Unfortunately, I lost some of the beginnings of this interview, in particular one part where he tells a story about fighting a lawyer on a $75,000 homeowner's claim and winning, but at the cost of $700,000 of expenses. He'd do it again every time. Rick is the CEO of Prime Insurance Company, and he is Old Testament. He understands a few really big ideas better than the rest of us and has the force of personality to show us the way. I'm calling him our spirit guide, and here's why.
My approach is to have not the cheapest price, but the price that if you had a claim tomorrow or 10 years from now, my price would be adequate because I rated on a marathon approach rather than a sprint approach. Right? Everybody's quoting everything every year trying to be the cheapest. And if you want me to be the cheapest, I just tell you I'm not going to be the cheapest. Go buy the cheapest, and you'll get what you pay for.
How do you convince them to come in the door in the first place? Because, the point you were making earlier about how most people just buy on price, clearly you've identified either customers that don't think like that or a way of convincing them to not think that way. How do you do that?
Well, it's two different groups, right? The people who pay more, I've insured for 35 years.
Yep. So they're getting a good deal now.
Yeah, they know the value, right? The new guys, in most cases, we're getting them when other people think they're a poor risk. I call them the land of the misfit toys.
Yep.
Right? A year ago, this guy was the best trucker in the world, and everybody was undercutting each other to ride it. Then he has a bad patch, and now nobody wants to ride him, right? So at that point, I'm not doing it on competition. I'm providing a solution. And, there's no doubt it's adequately priced because I'm not going to, take a risk nobody else would and be cheaper, right? I'm going to look you in the eye and say, look, I'm willing to insure you when nobody else will if you'll do these things and if you'll do this, being a good partner. And if you have a claim, you got to report it immediately so we can get on it and manage it effectively. And if you'll do those things, I'll insure you. And if you do them well, I'll give you a credit the first year. And if you do them well again, I'll give you another credit. And so over time, I will bring their rate down in hopes that I can keep them. Because if I charge somebody who can't get insurance anywhere else an extreme price and think I'm going to keep getting that, when they perform for me, I'm an idiot. Yeah. They are going to be able to get cheaper insurance. And even if I insure you at $40,000 a truck, and over 3 years I get you down to 20 or 18, guarantee you somebody's going to come in at 15 and beat my price. So I'm never going to, be able, but at that point I think I've built enough of a relationship with you that you understand, well, I can go to the cheaper guy but that's not a safe zone for me. I feel safer where I'm at, right?
Yeah. How do you pick the numbers? So how do you pick the 40,000 or whatever it is, and then the credits? I mean, what's the pricing process?
I mean, most people, including our government, uses actuaries.
Of course.
Right? I don't use actuaries.
I'm an actuary, by the way. So.
Sorry. I tell people
That's
I don't
okay.
like actuaries and I don't like lawyers.
Well, hopefully I'm doing better than you expected.
I got lots of friends that are actuaries and lots of lawyers that are friends. So anyway, I think that, to me, the only show I really watch anymore is Shark Tank.
Okay.
And I think it's, fascinating how some people go in there and they're, really, really good, and other people really shouldn't even be on the show.
Yeah.
Right. And I always look at it and every other business you're not asking somebody else to tell you what your product is worth, right? If you go out and you develop a product or whatever, you figure out how much you can charge.
Yep.
Right? Insurance is the only business where we, say, okay, I want to write, autos in California. Tell me how to be $700 cheaper than Geico.
Yep.
Right? So, again, to me, that's the competitive game where, there's not a lot of value to people. There's not a lot of value to me. It's a commodity-driven deal, right? Mm-hmm. I'm not in commodity-type businesses. And so, what we do is we use common sense, right? First thing I ask you is, let me see what you had. Right? I was paying $8,000 a truck. Okay, let me see your claims. Right? And then it's really the claims that drive it. I have, 7 years ago, if we wrote a trucker, within 1 year he would be gone with somebody else. The auto market continues to get tighter and tighter and tighter. So now we're renewing people for the 7th, 8th year. And again, every year I ask them, how did we do on your claims? Because that's all I care about.
Yeah.
I want my insured to tell me, you guys were great. You talked to us about the claims, you kept us informed about them, and we agreed with the result, right, with what you did. What I hear from everybody else, I say, what happened on that claim on your loss? I don't know. Well, did you know they were going to pay it? I didn't know they paid it.
Yeah.
Right? The first thing I knew it was on my loss run.
Yeah.
Well, why did they pay it? I don't know. I wish they wouldn't have. They shouldn't have paid it. So, again, as a company, we need to have a relationship with our insured where, they feel confident. And, I think in most cases, insureds are intimidated and scared because they're being sued. It's uncomfortable. And then their insurance company doesn't communicate with them, right? Your insurance company you should be contacting them the minute you have a claim. What do most people do the minute they have a claim? They think, should I or shouldn't I report this?
Yeah.
Most people don't report stuff because they know there's a downside. I tell people I am not going to punish you for reporting claims. I will cancel you for not reporting claims because you're not letting me do my job. Right? My job is managing claims.
You said that insurance companies have lost their way. I think it's a way you characterized this point about taking the hard road or the easy road, and more in your mind are taking the easy road. That's something you think has changed over time? What made you put it that way?
Well, I mean, if you look back in the 1980s when I was, a young man in this business, lawyers were just really getting able to advertise. Yeah. Right? They weren't
maybe
allowed
because of the liability crisis.
Yeah, and so now, now it's worse than it's ever been.
Yeah.
I mean, I don't know how much money lawyers spend on TV ads, but everywhere I go, they got to spend more dollars than anybody else, right? You got all these guys. Every town you go to, there's 5 or 6 of them, and they're on the airways all the time.
Yeah.
And so, again, I think and there's certainly no shortage of lawyers, and more coming out all the time. So I do think that, a plaintiff, if he's trying to bring a frivolous lawsuit, he'll go to some lawyers and they'll say, you know what, you don't have a good case. But he can eventually find a lawyer that will pretty much take any case. Right? That's my opinion. I might be wrong. But, the lawyers and the legal system is out of control because the insurance companies have taken the easy road for years and years and years. Now, obviously, there's, physician mutual companies and some other insurance companies who do make money, who do know what they're doing. Mm-hmm. But, in most cases, it's people who are more invested, right? It's like physicians running their own med-mal company. Right. And they know that allegation is bullshit, right? Where an insurance guy in London, like on my homeowner's claim, the thing I say is, if I would have had to convince London to fight that Katrina case, the hurricane case we took to trial, they would have never done it because they're all the way over in London. They're too far removed from the business. And so, I issued Lloyd's paper, and the claims management and the way they want to manage claims is totally different than the way I want to. And
why? So, actually, here's a thought. One of the things that I think has changed about the business, and I've only been in the business for 15 years or so, but I think that's become a little bit less local, and so there's some relief from state regulation in and before the 80s that allowed for bigger insurance companies, and those are more national insurance companies. They're larger organizations where I think that your perspective or your strategy, which is do the harder things, and I think quite a lot. I mean, I wonder how much of that's driven by your personality and how hard that is to replicate across a large organization, right? So people who are far away and big and maybe not that invested, the point you made in the outcome, if the company makes money or loses money, I care, but I don't care as though like I'm making money or losing money for myself personally. Right. So do you think it's because insurance companies are bigger that they don't care and you're in a smaller company?
Yeah, I mean, I think, everybody thinks bigger is better. And, my own personal banks, whoever, I don't care if you're big or small. I just want you to be personal.
Yeah.
I want you to understand me, right? And so, everybody says they're that. Right?
Of course.
So there's a big bank in Utah that, years back I had a $5 million line of credit with. And in 2008, I had the opportunity to buy Prime and become the majority owner. And they said, if you do that, we're calling your loan.
Really?
And I'd known them for like 20 years, right? And they'd been my bank. And I says, you know what? If you are what you say you are, you should know that this is the best move I could ever make in my life, right? And if you don't support me, I know that you don't understand me and you won't ever be my bank again.
Yeah.
And so they called the loan. I went to another smaller bank, right? I'd have taken a bigger bank too. I don't care how big or small they are. You just want them to get you.
Yeah.
Right? I've been with that bank since 2008. Now the big bank calls me every month.
Yeah.
Every month I tell them, I say, you know what? You guys ought to take me off your call list because I know when I really need you, you're not going to be there for me.
Yeah.
And so I don't think I think it's harder as you get bigger, right? But, I have over 130 employees now, and I can tell you they all get it, right? They're all on board. And I've had a lot of employees who don't get it, right? They'll take my paycheck. They'll, come to work every day and do it, but they think it's all, it's different than what I did at XYZ company, right? We looked at the book, and the book said, increased limit factor to go from 300,000 to $1 million is 30%.
Yep.
You know what? When I'm risking my money and I'm increasing your limit from 300,000 to $1 million, my math says that's 3 times as much coverage.
Yeah.
So why would I only charge you 30% more? And the answer is because that's what the industry manuals say.
Yeah.
Right? I don't.
And oftentimes, when you start asking questions about that, and you'll criticize the actuarial profession because not necessarily what they do is unreasonable, but that it's opaque, right? So you start asking questions. It's very hard to know.
Right.
Really, where did that come from? Where are all the assumptions that went into that made that a logical outcome and a reasonable conclusion? And and you might be like, well, that's nonsense, that one, but nobody sees that, right? So you just sort of put your faith in this, spaceless mechanical process that happens somewhere else.
Yeah, no, and
because everybody else is doing it.
We have an actuary, and obviously the state actuaries review our numbers and stuff. So, over time, right, we've convinced people that the way we do it does work and can work. But, back in the 80s and the 90s, the actuaries were very, very nervous, right?
They had no idea what was going on.
Yeah, they just take
that manual,
whatever information you have, and they try and put it in the system, and then when it doesn't work out that way, it's obvious. Oh, this changed and that changed. You didn't write these people. You didn't write as much in this state as you projected, and so again, I think that most people overuse actuaries. That's my own personal opinion. If you're a contractor, you know your business, right? You don't know your business and then go to someone and say, hey, we want to be cheaper. Tell us how we can be cheaper. Okay, don't go below 35 on the age. Stay above that, and that'll help you. And, to me, all of that's kind of hocus pocus because, again, you have 2,500 other insurance companies out there doing everything else, and so your plan isn't going to be executed the way that you think it is, because you don't know what the competition's doing. And if you did yesterday, they can change tomorrow. So, rather than being aggressive and attacking business, our model is we're going to sit back and we're going to look for opportunities with people who are being thrown into the land of the misfit toys for whatever reason, right? So, I had a call within the last couple of weeks, these bubble ball games. Have you seen those bubbles that people get in?
Yeah.
They run into each other and stuff.
Looks like fun.
Some big insurance company, I'll leave them unnamed, and we haven't written any of that because they provided coverage, $1 million limit for $500.
Wow.
Didn't matter how big your league was, didn't matter how many balls you had. It was just, somebody thought they were making money. And so now they're coming to us for quotes. The guy's here in New York that runs it. And, $10,000 is probably the cheapest you can actually. I mean, it's a sports league.
Yeah, right.
And you now have quadriplegics from it, where people, they have suspenders.
It's violent.
Well, and they have suspenders so that it's supposed to stay above your head, but people don't wear the suspenders right, so it falls down, and then they end up hitting heads. And so it doesn't matter what business you're in, you are going to have serious injuries and claims. You are. And, if you're getting really, really cheap insurance, and again, they didn't have a long view, right? Whoever's behind the bubble ball thing should have said, do we want to be like a flash in the pan and then be out of business because of all the problems we have? And that's really, they're telling me, we can't afford your insurance. And I'm like, that's not my problem.
Yeah.
Because you got cheap insurance for the past 5 years. I would have never given you that insurance for $500.
You designed your business around it, and now you're in a hole.
Right.
So maybe we can talk a little bit about Prime itself. So you bought the company in 2008. That must have been an amazing transition for you. How did that opportunity come about? And
well, the original shareholders were very, very wealthy Wall Street guys. John Orb was chairman emeritus of Smith Barney. Duke Chapman had been general counsel at the New York Stock Exchange, and guys that, when I was trying to raise money, I was trying to get a board. And I thought, man, if I had these guys as my board, I could raise money.
Yep.
Right. Well, it doesn't help you raise money when you have billionaires on your board. Everybody you go to says, why don't they just give you the money?
Yeah.
Right. And the reality was, they were all in their 80s and 90s, and they're not writing checks anymore. They're trying to get their investments out. So I did have one, shareholder, Ray Roberts, who continued to put money in, but he got Alzheimer's, and he'd have given me money forever until he got Alzheimer's and he was out of the game. So in 2008, when everything crashed, my board came to me and said, look, you need to go hire an investment banker. We need our money out.
Right.
So we went, did the whole deal, Citigroup, all of them gave us proposals, and then we get down to the, deal we have, and it's a crap deal. Right? It's like 1.4 a book. And I'm like, that's not attractive. So I went to the board and I said, look, I can't I can't buy you out today, but I'll pay you a fourth now, cash, and then the next 3 years I'll pay you the remainder, and I'll pay you 8% interest. Well, in 2008, interest rates were 8% interest.
Pretty good deal,
right?
Yeah.
But them believing that I could do it was, and if I hadn't had the relationship with them, they'd have just said no.
Yeah.
They'd have said, just take the 1.4 book and we're out of here. And then I'd have been working for somebody else. So anyway, the next 3 years, we started hitting it out of the park, and we were able to pay them off easy. And so at that point, I went up to 80% ownership. Currently, I own 52% of the voting stock, and I will not drop below.
Right. That's going to stay that way.
Yeah, no, I wouldn't, if I had done it in a traditional way and I had partners and people, it would have, wouldn't have ever worked out the way that it has, in my opinion. And, I worked with my dad for the first 15 years of my life, and he taught me a lot, and it was great, but we had totally different views. I had the view that I needed my own insurance company to show what we can accomplish. And, he didn't want to take risk.
Right.
Right. And so, and I didn't have a lot of money in 95, basically scraped up $700,000 to buy 5% of Prime that the old manager had. And so, I started out with 5% and over time worked my way up to 80%. And now I have 2 shareholders that own non-voting and voting stock. So out of all the stock, I think I own 47 or somewhere around there. But voting stock, it's 52.
Did your behavior change at all when you went from manager but not majority owner to majority owner? Did something change about the way you managed the business? Maybe even looking back, did you have a different perspective which affected your behavior in any way? Do you think? Were you more conservative, less conservative?
No, I think I got, over time as stuff worked, I got more convinced that, the way we were doing stuff, which is contrarian.
Yes,
right?
Right.
Everything
exactly.
we do is the opposite of what people say you should do. You shouldn't do that. You shouldn't do that. You can't write there. We did nursing homes in Florida and Texas back in the 90s when nobody else would, and nursing homes were getting sued left and right, and everybody else canceled them. And, we rushed in and had great relationships, had great lawsuits and great success stories with people that, we fought lawsuits and won. And, that's the only way you get good settlements is if, they think
you got a reputation.
These guys are actually going to kick our ass.
Yeah.
Right? So then they'll settle for a reasonable number. But you got to pick your battles. You can't take crappy cases to trial. And we've handled over 200,000 lawsuits. I've been to the Supreme Court in California. Saines versus Whitewater Voyages is a case in the 80s. Everybody said we were going to lose, and now it's cited nationwide. We had a case in Michigan where lawyers sued us claiming our policy was illusionary and, wanted to take us to the cleaners. The Supreme Court of Michigan, in their ruling, said Prime's policy is the most unambiguous, clear policy we've ever read.
Right.
And gave us a defense verdict. So, again, I think it's just keeping it simple, common sense, doing the right thing, right? Which in many cases means you take the hard road, not the easy road. And then you end up where you want to be instead of where you shouldn't be.
Well, one way that I think about this perspective, and I love it, is you're thinking for yourself, right?
Right.
That is something that I think people are always surprised of how rare it is, how hard it is to find in other people, and genuinely being, having an intuitive approach to problems and saying, like you said earlier, well, how is it running? Like, let me see your claims and let's talk about this and just think about it for a minute and come up with something that just sort of makes sense. And that usually gets you really far down the road.
Right.
It's rare. How do you find people that can implement your business model? Because I got to think it must be tough finding the talent.
Well, I mean, again, I think I've been really lucky in finding good people. My CFO, my COO, my president, general counsel. I mean, they're, again, obviously I went through other people before them, right? And I would say the biggest challenge was, I hire traditional underwriters and I try and get them to think outside of the box.
Yeah. And,
they don't get it. So I've had good luck finding people that are in similar, like some of my best underwriters I hired from Blue Cross Blue Shield. And I moved them to Utah. And they don't have all the baggage of a P&C underwriter. One of my underwriters that trained me, he's a book underwriter, right? He goes the ISO manual, and if I challenge him on something, he'll say, I got 3 times book, or I got 3 times the manual rate.
Yeah.
Right? And I'm like, well, that doesn't really impress
nothing
me.
To do with
right. You think that's your bar.
Yeah.
Right. And so I remember back when I was doing the mountain guides and the river runners, the manual said you should charge per boat, per horse. And my theory was, if you have 10 boats or 20 boats, if you have more boats, you can probably keep the boats in better condition. Right. So why would I penalize you and charge you by boat? Mm-hmm. Right? And a more accurate way of charging is per head. How many people you put down the river or put in a boat and how many days they're on it. So I came up with this guest day rate instead of per unit rate.
Yep.
And, I was making it up. 50 cents a guest day, $1. I didn't ask anybody. And over time, I adjusted it and made it work. But, that made sense to the outfitters. Right, and I could tell them, look,
sure.
If you do 1,000 more people, it's 80 cents a day.
Oh, insurance makes sense to people, and that's the thing that bothers me a lot about it. And one of the things I've been thinking about recently is how poorly insurance, I think, is probably communicated to people who are buying it. They don't understand it, and nobody's really trying to help them understand it because maybe the people who are selling it don't understand it. Entirely possible.
Right. Well, I think they understand. The policy form, but I don't think they understand the whole game, right? And the way that different people can, manipulate it and change your numbers. I mean, when I used to look at people's loss runs and they had $1.2 million in losses, just my knowledge of claims and claims people, there's some profit in there. Right? Either you paid a lawyer way too much. I mean, I remember the first case, we paid $1 million on when I was like 19. The carrier did. We spent $500,000 pretending like we were going to fight this claim, and I wanted to fight it.
Yeah.
And then they paid it. And right then I said, rule number 1, if I'm going to pay, I'm just going to go pay.
Yeah.
I'm not going to waste money and time.
Right. The posturing.
Yeah.
Threats.
And, if you're going to spend money, it's an investment, right? And you might, like on the Katrina case, we spent way more than the house was worth. But we had 50 other cases after we won that case that just went away. That if we wouldn't have won that case, you'd had 50 additional nightmares. Mm-hmm. So, again, it's a marathon, long view, being a partner with your insureds instead of being the cheapest, and the minute shit hits the fan, you cut bait and run, right? And that's kind of an oversimplification, but I think that's how most people feel about insurance. They've told me that. I paid those guys money for 15 years, never had a claim, then I have a claim and they cancel me. Yeah. And I tell them, well, you were probably with the wrong company. Yeah. Right? You should have checked them out a little bit more.
Mm-hmm. So you were working in insurance at 19. What year did you begin, actually?
Well, I mean, I was actually stuffing envelopes when I was 12 for my dad's LGA because, we used to market to 11,000 agents in the West, and then I started.
What sort of business was that? Was your dad underwriting?
He owned a life and health company in Utah and Arizona, which I never really got involved with, but we had Carolina Casualty, Canal. Great Southwest was a company in Arizona.
Doing transportation?
Well, everything, yeah. Transportation, special events. I mean, my dad insured Evel Knievel's Jump of the Snake Canyon. Okay. And I remember going up there when I was 12 years old. And I remember, the big thing was and there was a lot of people there, and they made them put up 2 chain link fences so that people couldn't fall into the river gorge.
Right.
And the minute, he took off and the parachute came out, he, went down towards the river, and the parachute, the motorcycle jet was hanging below the parachute, and it came back towards the side of the canyon where you couldn't see it.
Right.
So everybody ran right over both chain link fences.
Wow.
It took like 2 seconds for the whole thing to go down. But, I thought there would be people killed and all kinds of bad stuff, but there were only 2 lawsuits from that. One was from the outhouse company. In the old days, they had the wood outhouses, not the plastic ones.
Okay.
And the motorcycle gangs tore them all apart, created a big bonfire, and created a ramp to jump their bikes over the bonfire the night before. So the porta potty company made a claim for all of their porta potties, and then a young lady got pregnant that night, and she sued the event because she got pregnant. And, I was so young. I don't know what happened to the claims, but, those were the, extent of the claims from that event.
So we're out of time here, but maybe we can close talking a bit about how you think you can grow this business. Because the thing that fascinates me again is that so much of this seems to emanate from your personality, the combativeness with the claims, this philosophy of I mean, it's a simple thing. It's kind of doing the hard road instead of the easy road, but also, I think, the intuitive approach to making good decisions about the actual risks. These are things which are, I think, hard to find. How do you grow that company? How do you grow it?
Well, I mean, last year, I think we did 60 million, or 2 years ago, last year we did 130. This year, I think we'll do 200 or maybe 180. And to me, it's not us. It's the market.
Okay.
Right? It's the other people getting at us stuff that creates it coming to us, and we can underwrite it and evaluate how we're going to manage the claims. And, it's really people, right? I gotta hire other good people. That's what I tell all my good people is you need to hire an apprentice and start mentoring them so that, you duplicate yourself.
Yep.
And that's what I think, I'm doing all the time. So, and, as we write business around the country, we go to all the shows. We physically, as I said, visit our insureds. So
Yep.
when I go to Kansas City to visit an insured, on the way out here, we stopped at Motor City Dream Cars, which they rent exotic cars. And he rented a Ferrari to a guy that killed another guy. So it's a big claim, and we don't want to pay it. We want to fight it. So we stopped to meet with him to discuss the claim. And it's going very well, right?
Is it true you fly a helicopter?
Yeah.
And you fly a helicopter everywhere?
Well, no.
Almost everywhere.
I flew the helicopter down to Florida and up the East Coast.
From Utah?
Yeah.
Okay.
Around the country. And it's
how long is it faster than a regular airplane? I mean, it's slower.
No.
It must be much slower.
I mean, it's faster than a single engine small plane,
right?
It goes about 150 knots.
Okay.
So, it's you can't fly it for more than an hour or two, but it makes it convenient to stop and see people.
Which is kind of your point, because you're going to stop at your insureds and you see them all that way.
Right. And we go by agents, right? Every town I'm in, if I'm driving to an insured and there's a farmer's agent or a nationwide agent, I pull in.
Right.
And I tell them, look, you guys are shoving business down the road to your competitor. You should be sending it to us. And most of them, have a lot of people just give it up, right? Because they send stuff in, and a month later they don't have an answer. What I tell people is, if you get me a complete submission, we'll give you a quote same day. But I have to talk to the insured. If I can't talk to the insured, I'm not. But so I hired a new gal here in New Jersey. One of my underwriters from Utah is out here with her for the next 2 weeks, training her. She actually was an underwriter at one of our local producers here, and things changed for her. We know her, she knows us, and she gets our strategy. So as we continue to expand, I do meet good people. I do meet producers and underwriters who are as frustrated as I was with the inflexibility, right? We have a lot of flexibility to do pretty much whatever makes sense, and that's what underwriters like.
Do you ever turn a client down after you have the conversation with them, hear something you don't like? What would that be?
Oh, yeah. No, I call it lying, cheating, and stealing.
If they do one of those things.
I can't underwrite lying, cheating, or stealing.
And how do you detect that in this interview you have with a client?
Well, obviously, when you ask people, they can be lying to you.
Yeah, right.
You say, what are we going to do if this happens? What are you doing here? What are you doing there? And so, you make a judgment call. Right? It's like when people call me up and say, I can't make my payment. Will you give me some rope or some options? And a lot of times my people say, you shouldn't do that. And I say, you know what? I believe in people, right? Mm-hmm. 8 out of 10 people are good people, right? If you're dealing with the right people and you're talking to them. If you never have face on them, then they can throw you under the bus real easy.
Yep.
Right? So I give people the benefit of the doubt until they've proven me wrong. And so when we go visit insureds, we cancel about 1 out of 15.
Really?
Yeah, because they're not what they said they were.
Mm.
Right? He said he had 5 trucks. You pull up, there's 15.
Do you tell them that right there?
Yeah.
Oh, really? That's the hard road.
Yeah.
You told me this. I'm canceling you. And they're like, are you serious?
Yeah.
Like, I'm serious.
Yeah, we're done. Yeah, lying, cheating, and stealing. I can't underwrite that. I can underwrite anything on the planet except, not reporting. Lying about how many trucks you have, lying about how you're going to operate.
My guest today is Rick Lindsey. Rick, thanks for joining me today.
You bet.